good.
Let me. Oh, wait, I won't. Okay, go ahead.
Hello?
Yep, sounds good.
All right.
Okay, and I've got a few little things this week to go over. Okay. And away we go. Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Phan of Pacific Private Money. He is the marketing director because Mark is out of town. And our phone number is 888-912-1190. You're going to use that number to answer the trivia questions for a 5-pack tanning certificate, which is really cool because you can use 5 tanning certificates or services with this certificate given away during this show. Now, those certificates are not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. And today's trivia theme is random trivia. So, Nam.
Hello.
Hello there. So, for those of you who don't know, Nam is kind of behind the scenes mostly at Pacific Private Money.
That's right.
He does 90% of the work, right?
Just about.
Just about.
Yeah. Seems like it.
Actually, how many employees are there now?
Including our outside agents, there are about 16.
Wow.
Yeah.
Okay.
16,
No wonder you
9 in
guys
our
are one of the
office.
fastest growing mortgage investing firms.
Yeah, very busy. Very
Okay.
busy.
All right. What do you got for us today? What do you want to cover?
Well, today I want to talk about marketplace lending.
Okay.
It's a space that Pacific Private Money operates in. A lot of people are hearing about it these days, and I thought it'd be a good time to let people know what marketplace lending really is.
All right. Let's get right into it. What is it?
Yeah. So marketplace lenders, what are they? I mean, you're hearing more and more advertising on the radio as well as on social media, on the web about marketplace lending, where as an investor, you can invest in alternative products. For borrowers, you can get loans that typically maybe you couldn't get from a bank.
Okay.
So we want to talk a little bit about that because it's a growing industry or vertical where instead of going to a bank, you can get a loan through a marketplace lender for a lot of different kinds of products. Marketplace lending has been around since essentially the mid-2000s. Originally, a lot of people heard of the term crowdfunding.
Crowdfunding, yeah.
Yeah, and so crowdfunding is really where marketplace lending grew from.
Okay.
One aspect, just to kind of back up and describe crowdfunding, it's the ability for individuals to invest in product, a company, a service, or some sort of charity. The portion of it where it was people lending to other people, that became known as peer-to-peer lending.
Okay.
And peer-to-peer lending sort of got repackaged into marketplace lending, and that's what you're hearing these days. Peer-to-peer lending and marketplace lending is where individuals can lend money to other individuals.
Okay. I'm trying to think of all the rules. There's usury. Is it secured, unsecured?
Yeah, some types of loans are unsecured. Some are secured by real estate, like the Pacific Private Money Fund.
Okay.
And others are just like giving a loan to an individual based on like the equivalent of a FICO score. So these marketplace lenders have cropped up and sort of taken or carved out that borrower who couldn't get bank financing for some reason.
I mean, to me, it sounds kind of risky.
It can be.
I mean, because I'm thinking, let's say I'm one of these lenders. Some guy just fills out an app on the computer. I mean, how do I check any of that stuff?
It's a really good question. So with the advent of a lot of technological changes, big data, the ability to get more information about a consumer has enabled them to make judgments, sort of like FICO or alternative to FICOs.
So it's basically just like a personal guarantee in that, right?
For the unsecured stuff.
If it is true, yeah.
Yeah, but for the secured, like real estate backed, then we've got that asset behind it.
Okay.
But you're seeing more and more companies who are taking what's sort of called metadata. They're taking data from a bunch of different sources about consumers that is like an alternative to the FICO score. I mean, I've even heard of a company that uses your Facebook data. to make evaluations on your creditworthiness or your ability to pay loans.
What do you mean with that? Facebook data?
Your Facebook behavior,
behavior.
your background, some of your information.
The stuff you post, the crazy pictures you post on it?
Yeah, they put it into a magic box or algorithm, essentially,
Wow.
and they make a judgment on your ability to qualify for a loan. And so these companies are doing a lot of interesting work, and banks and regulators are watching this and saying, okay, is this a viable alternative to the traditional FICO-driven decision-making
Okay,
process?
so if I post a bunch of pictures of me on vacation every month I'm on vacation, then suddenly they go, oh, this guy must be rich and he can afford it and that sort of thing?
I imagine that's probably some part of the calculation. So they probably they could look at your LinkedIn profile, see what your professional.
Yeah, but you can put anything on there. I could put a picture of me in front of a bunch of yachts.
True. I suppose there's some gaming elements to people with their social media, but I think across the board, these companies are looking at a lot of different data sources. And they're not excluding necessarily your credit score, but they're looking at other data sources.
All right. Tell you what, we're going to cut to a quick commercial break here. When we come back, we're still talking about basically crowdfunding. We'll get into a little bit more how that works. I want to make a quick mention here for the Mount View Hotel. I don't know if you've ever been there, Nam, but it's a Mount View Hotel and Spa in Calistoga, and they're having a special. Any suite or cottage for only $2.99 a night, Sunday through Thursday. Includes the facility of the pool, mineral water, jacuzzi, sauna. I mean, it's awesome. And a $20 breakfast voucher to Johnny's, one of 2 restaurants on the property. Call 707-942-6877 to reserve your special now, or go to www.mountviewhotel.com. All right, here is our first trivia question. Again, we're talking random trivia. What word refers to the minimum attendance necessary for U.S. Congress to conduct business? If you're the first caller with the correct answer, you're going to win that five-pack tanning certificate by Tan Bella. You call 888-912-1190 to answer this question. What word refers to the minimum attendance necessary for U.S. Congress to conduct business? And you will have heard this word. All right, don't touch the dial because the best of investing is going to be right back. Okay, good. That was a good first segment. Nice and smooth, huh?
Yeah, felt okay. Hopefully I'll have ammunition for the next sessions.
Yeah.
So what is the word? Let's see.
Can't Google it though.
No. It's not a quorum. No, that's not. It's in the middle. Okay, so this would be for May 6th. This show.
You had some more questions about and then we're also Pacific Private Money doesn't do that.
Doesn't do crowdfunding. We do in the sense that individual investors are funding, putting their money in our funds. So
that's true. I just keep thinking of people putting in $50 here and $100 there. Yeah.
So, let's see. Don't ask the. Let's see. Second part of that, the first question.
Which one?
The what's the difference between your fund and a REIT?
Oh,
Just
yeah.
ask just do that.
I mean, I can answer that one.
Okay.
Yeah. Okay. I'm going to make a mention of these guys here too. Okay. This is one of those where I got a few overlapping ones, so I got to get rid of these guys. Okay, here we go. Welcome back to the Best of Investing. Edward Brown here, along with Phan of Pacific Private Money. He's the marketing director because Mark Hoff is off today. Here was our first trivia question. What word refers to the minimum attendance necessary for U.S. Congress to conduct business?
I have no clue.
You do have a clue. You said it off air.
A quorum?
A quorum. That is correct. All right.
Gone with my first instinct.
It's usually best. I want to make a quick mention also here for the Hornblower yachts. Make Mother's Day special by going on the Hornblower. Treat mom to a relaxing day on the bay. Feast on a gourmet brunch with free flowing champagne. I love that. And or indulge in an elegant 4-course dinner. Cruise features spectacular sights of the city, live entertainment, and attentive service. Which I gotta say, I've been on there before, and they do have attentive service. Food is excellent. For reservations, go to hornblower.com. Book today. All right. So, Nam, we were talking about basically crowdfunding, and off air, we were just talking a little bit about the fact that, in a sense, Pacific Private Money's fund is sort of like a crowdfunding,
Yeah,
but not to the tune of investing, hundreds of dollars.
yeah, and there needs to be some delineation. Crowdfunding really encompasses, and marketplace lending really encompasses all types of lending, whether you're investing a small amount or you're investing a large amount. For funds like ours, it's a Reg D fund. You have to be accredited. So, and the minimum investment is $50,000. There are many other marketplace lenders that require much less. You don't have to be accredited. You can invest as little as $1,000.
But I would think their administration fees would be just through the roof for administering $1,000 investment.
Yeah, and you know what? You would think so. In the traditional world with banks, then that would be a little bit more difficult. But these days, with a lot of the advances in platforms technology, that allows a more streamlined process for investors to invest. It's much more self-directed. It's much easier for the investor to just follow the process and go through and invest.
Well, it's interesting. My son's friend is one of the founders of a company that invests like off-dollar type things, like a little bit of tip here and tip here, like literally in dollars rather than hundreds of dollars.
Right.
And they do it in mutual funds.
Mm-hmm.
And it's amazing. He's got 800,000 members.
Right.
Basically.
Yeah, it's and that's the great thing about technology. It's really allowed a much more efficient process for people to invest, but also for people to borrow. And that's one of the other reasons why crowdfunding is growing. Keep in mind, the crowdfunding in a way competes with banks because if a borrower can get funds from a crowdfunding or marketplace lender, then they don't need to go to a bank.
Generally, what have you seen the interest rates to be on the borrowing side?
Higher, certainly higher, because a lot of these borrowers can't qualify for bank financing. But also what you're seeing too is the user experience with crowdfunding platforms. It's very convenient, fast decision-making process for a borrower on the borrower side to get qualified for loans. So that's one area that banks are looking at and saying, okay, users are having much better experience with getting a loan through some of these marketplace lenders.
But if they're paying higher, then if they can get a bank loan, they will. So where's the competition there?
The competition is speed. Just like for Pacific Private Money, a lot of times borrowers come to us because there's transactional distress. They may be bank quality. A certain percentage of them are bank quality, but still they're coming to us because they need the funds quickly. For other types of loans, the same scenario could apply. They could be bank quality, but they need money quickly. For others, they just can't get a bank loan, so they're going to an alternative source like crowdfunding.
And is there any minimum that you've seen of amounts that people need to borrow? That a lender will say, well, I'm not going to lend you $100, but
right.
1,000 or whatever.
Yeah, you're seeing as low as 1,000 for unsecured. You're seeing also people get auto loans. So there's a lot of marketplace lenders.
There's got to be state regulations though across lines and that sort of thing, and being a broker or your usury. I mean, I could just. It seems like a neat idea, but I don't know. Maybe I could just see a bunch of holes in it though.
Well, that's it's still a very much a industry that it's in its infancy. Mid-2000s is not a long time for the space to have been in existence. So I went to a conference in December down in Southern California, and it was interesting. There was a lot of conversation about, the regulation of the space, the transparency of the underwriting. So there's a lot more regulations coming into the space, which is good for borrowers and investors. There's more transparency. Banks are starting to look at it and saying, is this a viable alternative? Should we participate with crowdfunders or marketplace lenders? And they're starting to do that. They're starting to be the lender to the lenders. Because they see that this industry, this place is growing up, so to speak.
Well, we're talking about regulations. This reminds me of a story, and this goes back to, 1980, when interest rates were high. And I remember a story about this guy who put an ad in the paper. So again, they didn't have the computers then, but basically it could be theoretically the same thing. So he puts this ad in the paper and he says, I've got this land in Alaska, and he says, I know there's oil there. I just need $1 million to go ahead and drill the oil. And back then, oil prices were relatively high compared to back then. So he says, here's my deal. He says, if I strike oil, you get your percentage, whatever, you can make, umpteen millions of dollars. But he says, I absolutely 100% guarantee in writing that you'll at least get your money back. And so, he raised, let's say, $100,000 from 10 individuals. He actually raised his $1 million. In 1 year, he wrote back and he said, I'm sorry, I did not strike oil, but I did promise you that I would guarantee you at least your money back. So he wrote everyone a check for $100,000. And what had happened was he didn't own anything, but interest rates were like 16%. So he took $1 million, he put it in the bank at 16%, made 160 grand. Then he paid back everybody the $1 million. And most people, when they got their $100,000 back, thought, man, this guy's really honest. I didn't lose anything, right? But one guy realized, hey, wait a minute, I could have earned interest on that. And he started poking it, looking into it a little bit more. And that's how the guy got caught. I could imagine the same sort of thing here where, people want to borrow money, but, who knows what they're going to do with the money. It's just kind of interesting on that. Tell you what, believe it or not, we got to go to another quick break. Quick mention here for discover the world of sea kayaking, paddleboarding, and biking in Half Moon Bay. Whatever your experience, they can accommodate you. Their fleet is made up of single and double kayaks, stand-up paddleboards, which I don't know if you've ever done that, but that is a lot of fun. You can come play in Half Moon Bay. Call 650-773-6101 or go to www.hmbkayak.com. That's HMB as in Half Moon Bay, kayak.com. All right, the second commercial trivia question is, what kind of dentist specialist performs root canals? All right, That is our question. 888-912-1190. Don't touch that dial. The best of investing. We'll be right back. Okay, good.
Okay, so let's see. Third section is going to be pretty short, and then the fourth
this
is the longest.
740, yeah.
Okay.
We can just, kind of cover the crowdfunding. I'd like to, some private money.
Yeah. So let's do this for the next one, because I want to say, hey, you know what? In the last segment, we were talking about what is the risk for people?
Yeah.
If somebody is borrowing money, how do they know what's being done with it?
Yeah.
And then that could be a segue into specific private money.
Yeah.
But I do want to end with on the everyone else is how do I want to say it? That they're not just underwriting kind of on a whim. That a lot of these companies are very reputable. They have something or other, and then segue into.
Okay, yeah, I'll just say let's just finish up talking about crowdfunding.
Yeah. Welcome back to The Best of Investing. Edward Brown here, along with the Marketing Director of Pacific Private Money, Phan. Here was our second trivia question. What kind of dentist specialist performs root canals besides an evil dentist? Orthodontist?
No, an endodontist. Orthodontist says the braces. Very good. Okay, you should know that. We want to make a mention here for the Hyatt-centric Fisherman's Wharf in San Francisco. They're located in the heart of San Francisco, close to top attractions. Their hotel is a prime spot to explore the city by the bay. Visit Pier 39 and Ghirardelli Square or take a nearby cable car around the city. Hyatt-centric Fisherman's Wharf features a heated outdoor pool, which I guess you need in San Francisco, fully equipped fitness center, and on-site dining options. Call 415-563-1234, or go to fishermanswharf.centric.hyatt.com. All right, so Nam, let's finish up with the crowdfunding.
Yeah. So, just something that we discussed on the last segment, and the questions were about, what kind of guarantees are there for the investor or for the borrower that or for the investor, they're putting money into a marketplace lender, and where's that money going? For the borrowers, are they underwriting correctly? Are they really qualifying that borrower to the same degree that a bank qualifies everyone else with FICO scores or whatever? A lot of these companies have built and developed algorithms and different ways to underwrite, and are doing it very successfully. So I just want to comment that there are a lot of companies out there that are building really good track records. And Pacific Private Money, we underwrite like a bank in a lot of ways. So we're kind of a blend of both. I mean, we still, and private money itself has been around long before the term marketplace lender or crowdfunders existed. So in a way, we were crowdfunding before crowdfunding.
I think private lender has been around before banks.
Yeah, absolutely.
That's what happened.
And the difference is that private lenders were doing it very locally. So it was localized to the geography, where a lot of crowdfunding sites and marketplace lenders are trying to do it nationally. They're trying to do this sort of peer-to-peer lending at scale. And Pacific Private Money, our focus is local. We've been doing this really, for a long time in the Bay Area. We know Bay Area real estate, and we know valuations, and our underwriting has been, essentially the same. It hasn't really changed with marketplace lending.
Well, that actually brings us to, we got a few emails, and one of them, again, since Mark's not here, I'm sure you can answer this.
Mm-hmm.
Shouldn't diversification nationally be a better strategy than investing all in one geographic location?
Yeah, and the way I would answer that is a yes and no. I mean, it could be for somebody who really knows markets outside of their geographic area. For us, we're focused on the Bay Area. It's the market that we know well. We don't want to scale beyond our local market.
Well, what a lot of people don't realize is even if you could earn a higher interest rate outside of California, one of the problems I see is that all it takes is one bad loan, really bad loan. I mean, I remember years ago, there was a hard money lender who convinced me to go into the state of Michigan. And at the time, Michigan wasn't doing that well, but I was going to get like 16% on my money. Didn't invest a whole lot in it, and it seemed like the loan to value was pretty good. Well, as it turns out, it was a market I really wasn't that familiar with, and it went into foreclosure, and we only ended up getting we got 90 cents on the dollar. So it wasn't the worst thing in the world, but that's a 10% loss.
Yep.
So I had to make way more than 10% on the other deals at the same dollar amount invested in order to more than break even. So with Pacific Private Money, how many loans go into default?
It's a very, very small number. I think it's less than 1%. So, and the fact is that when you're underwriting like a bank and your exit is a bank, then typically you're going to have very low default. So
I think I remember Mark telling us on the air that out of 1,200 loans, less than a dozen. So that would be less than 1%. And of those that went into default, actually nobody lost money.
Exactly.
Yeah.
Just because it goes into default doesn't mean that anyone's going to lose money. There's a process that it goes through, and ultimately there was no loss.
Yeah, because sometimes what happens is the borrower comes to the last minute and pays all the back interest, back late fees, and found another lender to give them the money.
Right.
Or on the courthouse steps, someone comes in to buy it.
Yeah, or they sell it. They put it on the market just like
market.
any other listing on the MLS. They get out of the loan, the property gets purchased, and then they pay us off.
Or the lender actually takes it back and sells it for a profit, which I believe did happen in the Pacific Private Money Fund. There was one or two foreclosures, and Mark was telling us last week that there were one or two foreclosures, and the fund actually became the owner of the property and sold the property, fixed it up a little bit, sold it actually at a small profit.
Right.
So that was actually that was actually better than if it didn't go in default.
Absolutely, and also you have to look at the beginning when we actually loan the money. You know, our underwriting, especially for properties that we put in a fund or loans that we put in a fund, you know, we typically are going to put ones that are at a lower loan to value.
Okay.
So pretty conservative.
Very good. When we come back from our break, I do want to find out if there's any deals of the week. We also have a couple of more emails to answer here, like what's the difference between your fund, that's the Pacific Private Money Fund, and a REIT, because that's actually a very good question. Want to make a new mention here for, have you ever been to Alliance Redwoods in Occidental?
I have not.
You've not. Okay, it's a really cool place. They have, like, a lot of times they have men's retreats, stuff like couples retreats. So nestled off the coast of Northern California deep in the Redwood Forest, Sonoma Canopy Tours. Now this is like zip lining.
Oh, that's awesome.
It's awesome. I mean, I've done zip lining before. I haven't done it here, but I've done it in other places. And it's very, very fun. It's a high adventure and completely unlike anything you've ever experienced. The guided eco tour includes multiple zip lines, sky bridges, a majestic spiral staircase, and rappel to the forest floor. You'll be immersed in the unparalleled beauty of the world-famous California coastal redwood. Sounds like a lot of fun. Check them out at SonomaCanopyTours.com or call 888-494-7868.
Now, some of these aren't at the top of the trees, are they? Because their trees are like 300 feet high.
Well, this one I think is maybe a couple hundred feet.
Oh my goodness.
Yeah. A little scary, but ought to be a lot of fun. All right. Third trivia question. What instrument was big band leader Benny Goodman most associated with? Call 888-912-1190 to answer that question, and you could be the winner of the tanning certificates. Went over just a little bit, but that's okay. All right. Good. Okay, so we just have this one big segment and a small one.
Okay, so deal of the week. Okay, deal of the week.
I mean, I know that, I can talk about the one in Xerophel that I know we're working on. I don't know if there's others.
We've just got a couple in play, but nothing that's, should have asked this before. I would almost say that we're so busy right now. The deals that we're doing are all some of the most common ones that we see. Like the bridge loan with the cross, and so maybe we can emphasize just that, unless you want to talk about the San Rafael one.
I can bring that one up, and then you can bring up the other.
Yeah, and just I'll since this is a longer segment, I can just say, hey, you know, this is what we're seeing a lot of.
So first, we'll answer the question about the REIT. How's that?
Yes.
Okay. Welcome back to the Best of Investing. Edward Brown here, along with Phan of Pacific Private Money. Third trivia question was, what instrument was big band leader Benny Goodman most associated with?
Let me see. I'm gonna have to guess tuba.
Clarinet. He was a clarinet guy. Okay. Don't want to embarrass anybody here. Okay, so an email came in. Mark's not here to answer it, but I know the answer to this one. It says, what is the difference between your fund, this would be the Pacific Private Money Fund, and a REIT? So a REIT generally has lots of either mortgages or real estate in it. One of the major rules is that they're supposed to pay out 95% of the net income. And a lot of shareholders like that because they realize that they're not going to be like Apple Computer where they're holding billions of dollars and not distributing it out. But here's one of the problems that I see. How do you define net income? What if the managers decide we really needed to buy that airplane to go visit all the properties? Well, that's an expense, and you got to subtract that out, and then the net income is after the expense of the airplane, the fuel, and all that kind of stuff. So I'm not saying that that there's any nefarious companies out there doing that, but I don't personally like the idea that someone else is going to determine what my net income is going to be. Whereas the Pacific Private Money Fund is really simple. There's a management fee, there are some small administration fees, and then the net just gets paid out to the client, which right now, what's the yield? It's 7.6%.
7.76, I think, was the latest.
Latest one, 7.76, which is, and that's non-compounded. Compounded rate is 7.8 something.
Yeah.
Something like that. So that's a pretty good rate, and I believe you guys pay it monthly.
Yep.
Which is good. So that would be like 0.67%.
Yep.
Which is that's more than most banks are paying in a year, aren't they?
Yep, that's right. That's right.
And your loan to value in the fund is still under 60%.
It's 56.5, I think, in the last.
All right, so 56.5% loan to value, which is extremely conservative, mostly Bay Area property. I know you go a little outside the Bay Area, and you're paying 7.6.
Yeah, 7.7%.
7.7%. That sounds pretty good. I like that.
Absolutely. Also, we, as you just mentioned, most of our loans are in the Bay Area, so we don't need a jet to fly anywhere. No private jets, so we're driving.
That's a good. That's
our own cars.
Yeah. Well, plus Mark told us before that you have brokers like who can do broker opinions, in LA and other places, Sacramento. So you don't have to drive all the time. You can
right.
Trust us.
Right. We have a great network of brokers who know us, who know we're reliable and fast. So we get calls all the time, all over the state. So.
Now, for Deal of the Week, I remember Mark telling me about this one. So again, he's not here, so I'm going to go explain this one, and then you can explain another Deal of the Week. So there's this company in San Rafael. They own their building. Due to some strange record keeping, not anything crazy, but the books were kept a certain way. There are a couple of very, very small technical issues in which a governing agency is penalizing them. Again, nothing. They're not trying to cheat anybody. It was just like they put box A instead of box B. I mean, something really, really simple. Yet the fine is $700,000. Now, this company does make millions of dollars, but that's still $700,000 is a punitive penalty, basically.
Right. It's huge.
And they have to pay it by May 31st. Well, this company doesn't have $700,000, and because of the nature of the fact that they already have a first mortgage that's at a really good rate, they need a second mortgage on their building. Most banks don't want to do second mortgages on commercial property. So they came to Pacific Private Money, also from the standpoint of speed, because May 31st will be here before you know it. And the company, makes good money, the fairly high FICO scores. The loan to value on this property will be about a little less than 60%. And the building is being put up for sale. That's another reason why banks won't touch it. They don't want to lend on a building where it's up for sale. They may just get their money back so soon. It's like, for them, it's a waste of time. But for Pacific Private Money, because they are going to charge points, it's like, sure, we'll lend you the money, and if you want to pay us back 3 days later, that's fine. Now, our rate of return is, gazillion %.
Yeah, we get quite a few loans that actually pay off, within short period of time. We've had one, I think, pay off in 3 weeks. So
actually, there was a deal I remember Mark did. It paid off in a week. Literally, It got funded, and then a week later, there was a payoff. Very, very crazy. But again, because Pacific Private Money charges points, which they share with the fund. So the broker shares it with the fund, and that kind of helps the yield.
Yeah, shares it with the fund, so vis-a-vis the fund investors as well. So other deals of the week, I'll say it isn't any one deal. It's the kinds of deals that we do. Typically, we're seeing so many of these bridge loans that we do where and a lot of these are coming from real estate agents, from mortgage brokers. A client has a home that's on the market to sell, especially now as we're entering buying season.
Yep.
And they're out looking to move up or move down. And, again, they're trying to close on the sale of their home to fund the purchase. A lot of times what happens is they get into escrow on the home that they want, but they can't close on that home that they are currently in time to fund it. Banks don't do those loans. And so Pacific Private Money comes in, we can cross-collateralize and lend on their purchase using one loan for both properties. They sell off their primary residence and then they pay us off. I mean, we're seeing just that more and more right now as we're entering the real estate season. So I would say more than anything, those are the deals of the week. There's deals like that all week. all month.
And before we forget, if people are listening and they're thinking, well, this sounds pretty good. I mean, it seems like a conservative investment, especially since nobody's ever lost money, less than a 1% default rate in the company, and even with those defaults, nobody lost money.
Right.
How would they get a hold of Pacific Private Money?
They can call us at 415-883-2150 or go to www.pacificprivatemoney.com.
That's a kind of a simple website.
Yep.
It kind of says it all.
Yep, absolutely.
Okay.
You can see the types of loans we do, fill out a form, and we'll contact you.
Okay. Now, the catch is to invest in the fund, you do have to be an accredited investor.
Correct. That's a Reg D fund. So accredited means you have to have $1 million net worth, excluding your primary residence, so we can't use the home you live in that calculation, or you have an income as an individual of $200,000 a year, or $300,000 as a couple. So.
All right, and a quick question for you is, let's say I invest in the fund and I'm happy with it, but I want to get out.
Yeah, so you can redeem. There is a 12-month lockup.
Okay.
That's actually the minimum required. It used to be 24 months, but as of this year, we reduced it down to 12. You can redeem, and it's on a first-come, first-served basis. So typically, you just let us know that you want to get your funds back, and it's typically like a 30-day process.
Okay. And if I remember correctly, Mark telling us that even if there's no, at first-come, first-served, if there's no money currently to pay, as soon as loans pay off that are in the portfolio, before they get reinvested out in a new loan, they have to satisfy anybody who wants to get out.
Exactly.
So it doesn't have to be a Ponzi scheme thing where you're using people's money for another type of thing.
Right.
Yeah, I remember. In fact, when he was interviewed by Rob Black, and the question came up, how do we know you're not a Bernie Madoff? Which we kind of laughed at. But the thing is, I actually went and pulled some preliminary title reports on a good survey of the loans, sample of the loans that were in the fund, just to make sure that when Mark says that you guys have a first mortgage on those loans or those properties, that you really do. And sure enough, when the preliminary title report shows that's what it is. So that's the reason why I have a significant amount, let's say, in the Pacific Private Money Fund. All right, so we don't have any more trivia questions, but when we come back, we're going to have some closing comments.
Yep.
And I'm talking to Phan, Pacific Private Money's Marketing Director. Don't touch that dial. The best of investing. We'll be right back. Right on the money. All right. It's 5 minutes. What do we want to... Was there anything...
Let's see.
Goes fast, doesn't it?
Yeah, it does. Holy smokes. Oh, and by the way, I'll drop this off for Mark. Since he's out of town, he'll probably get it like this weekend.
Yeah, just put it on his desk.
Let's see. What do we want to wrap up with? I can't believe how fast it went.
Thanks for coming down.
Yeah.
Oh, so next week we don't have any co-hosts or anybody. So I don't know if Mark's available.
Okay.
If he is,
yeah,
we can do it at your office or whatever.
Yeah, we can. Okay, let me talk to Mark.
I could just do a solo, but I'd rather not.
Yeah, no. I could see how doing this solo would be tough.
Or
if we do it next week, I have to drop off my laptop because you know how it was glitching last time?
Yeah.
Something happened. I think it got dropped or something. Because it's like, it kind of has its own mind when I'm in certain applications.
Okay.
So I'm going to drop it off tomorrow. And hopefully I'll get it back by the show. Or if we get another computer in there, then I'll load the software.
Okay.
So one way or another, but it may not be at, we may not be able to record at the in the bottom next week. So, but let me see. So we need a host for next week. All right, let me think about that.
Yeah, because this is where we should, really get people who we want as Pacific Private Money, to get some benefit out of it.
Oh yeah, you mean like Rick or somebody else, or
no? I'm thinking like we had Ed Diaz.
Oh right.
Who
does
business with us.
Jeremy. Forcier.
Yeah, I mean the thing is I've got a couple of mortgage brokers
Okay.
him now. So
who else would you need? What other kinds of people?
I mean, could be a real estate attorney or someone we effort.
You have enough real estate agents too, right?
Yeah, well, yeah, Patty. I try not to overlap that kind of stuff.
Yeah. Okay. Let me think about that. Have to get it quick. Okay, so hold on. What are we going to say here?
Okay. So 5 minutes goes fast, and I just need about a minute and a half to say goodbye.
Yeah.
We didn't go into, would you guys consider lending other than real estate?
Do we want to go through a couple of questions? Each one would probably take like,
Which question?
email questions. So that being one of them,
Yeah,
that would
that's
take, that'll take about 30 seconds, right? Is there another question?
We could do from, let's say, a borrowing standpoint. How do you borrow? The process. What do you guys need?
Yeah.
Or are we having any fund events?
We're going to have one on, let's see, May 20, yeah, this. Don't know if I can make it a webinar yet, or an actual event. It would be May 24th. Well, the last Wednesday of the month is actually May 31st. But Memorial Day is that Monday, so I think we decided it was going to be May 24th.
Okay.
Yeah, let's say that. Let's put it out there, and we can talk about what we cover at the fund events.
Okay. Yeah, May 24th would work for me.
Okay, great.
Because you have to set that out now, because it's not on my calendar yet.
No, so we'll get that out.
Let's actually start with that.
Okay.
Welcome back to The Best of Investing. Last time for today, I'm Edward Brown, your host, along with Phan of Pacific Private Money. So, you guys do seminars periodically so that people can learn more about investing with Pacific Private Money.
Yeah, so we hold fund information sessions about once a quarter at our office in downtown Novato. We also do webinars as well. But the next event coming up is May 24th. It's a Wednesday at our office, which is at 1555 Grant Avenue, downtown Novato. It's from 6 to 8 p.m. And it's really open to anyone interested in learning more about the fund. We go through the fund performance, how we underwrite, expected returns or historical returns for investors, and then essentially, a Q&A session at the end.
And I usually do that with Mark, and I think the best part, as I remember, is Bianca provides a nice little food hors d'oeuvres.
Yeah, a lot of times people ask for her card, asking if she'll cater for them.
Yeah, she's good.
Yeah, she's picked up some business from that.
Has she really? Well, that's good.
Yeah.
Hopefully not too much, because she's a good employee.
I know, she's great. She's great.
So anyway, okay, so you can learn about the fund, get some free food.
Yep.
May 24th.
And to meet Mark.
Yeah.
A lot of people want to know who is the fund manager.
Yeah,
so
the guy behind the scenes.
Yep.
Yeah, I got to say that I had looked at least 50 funds in the last 20 years, and I didn't like a single one, except for when after Mark and I had been doing the show for about 3 years, and he asked me to, because I knew a lot about these funds, and he said, would you help me with this? And I said, well, I've gotten to know you for about 3 years. We never did any business together, but I said, you seem like a pretty darn good guy. So I asked him, I said, I'll help you with this as long as I can see a few things. Like, I want to make sure that your interests are aligned with the fund. He had already thought about that, and that's like splitting the points with the fund.
Right.
And then being able to get out of the fund, which, again, at the time, he was thinking, I think it was going to be 3 years. And I said, well, could you make it 2? And he said, yeah, we'll make it 2. And then now it's 1.
Right.
Which is even better.
Yeah, really, the redemption has been a non-impact for our investors. I mean, they very few people redeem. So we just lowered it.
Yeah, why would you want to redeem if you're earning 7.7%
right.
in today's market? Now, I know the stock market's been going up, but if people kind of wonder, like, it's good to diversify.
Yep.
And, what happens if you put a bunch of money into the market now and it starts to go down?
Right.
Yeah,
right.
I don't want to lose my money.
No, it's good to diversify, and we have a lot of people who invest in us for that very purpose.
Yeah, in fact, I think Mark said that when anyone wanted to redeem, it took less than 2 weeks was the average. Yeah,
we try to under-promise and over-deliver, essentially. So
because there's how much under management right now?
We have about 28 million.
28 million. Okay. and that seems to be growing.
Yes, yeah. This time last year it was about 14, so
Okay.
yeah, we're growing.
And I think the major thing for me that I like about the fund is the fact that you have a whole bunch of deal flow.
Right. We have more deal flow coming into our company, of which a percentage goes into the fund. So we cherry pick the best loans, the ones that are generally the most conservative, shorter term in nature in terms of maturity for the fund. We like the fund to have sort of a high revolution of capital.
Okay.
So,
And again, would you give out the information?
yep, you can go to our website, which is www.pacificprivatemoney.com, or you can call us at 415-883-2150.
All right. We're going to thank you very much, Nam, for joining us. We'll
Thank
have
you.
to have you back on again. Here's our golf thoughts for the day. PG Woodhouse, I'm not even sure who that is. He said, to find a man's true character, play golf with him. I could see, otherwise you let the expletives go on the course and you go, you know about that guy. And Paul Harvey, remember him? Good day. Said, golf is a game in which you yell 4, shoot 6, and write down 5. I like that one. All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long. And a little early. Okay. I'll just play a little bit more music.